everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. But the general setup in Asia is cooling off. The Nikkei has managed to cool off to the lows of the day. The Hong Kong markets have slipped into the negative, and so has the SGX Nifty. So from a gap up of 40 points, which was anticipated almost an hour ago, we're just down to just 1 point currently. Now, as far as ADRs are concerned, most of the ADRs ended with a positive bias. Tata Motors managed to surge over 2%. Vedanta, Dr. Reddy's and ICICI Bank also managed to move up in trade. What didn't do well was HDFC Bank, but that was also marginally down in trade. How did crude pan out in trade? Over the last 2 days have been rather muted for crude, but still, we're trading with the negative bias. Brent is below the $68 barrel per mark, and WTI is below the $63.50 barrel per mark. So that's what's happening as far as crude is concerned. Mixed closing by most of the base metals on the LME because aluminium was down over 1%. Copper, zinc, as well as nickel managed to inch up in trade, and so did tin. As far as China is concerned, most of the base metals in China are trading with a negative bias. Aluminium is down over 0.5%, while zinc is down over 1%. Most of the precious metals are trading muted in trade. Gold and silver have managed to inch up in trade. As far as fund flows are concerned, FIs remain net sellers in the market. They sold in 377 crores. DIs bought in almost 480 crores in the cash market. Some of the sectors in focus, one of them was the Nifty Bank, which managed to rally in trade yesterday because of strength in the private sector banks. Nifty mid caps and small caps managed to outperform the Nifty in trade yesterday. As far as the other sectors are concerned, the auto and media sectors managed to move up in trade yesterday. What didn't do well was the IT sector, which was down almost 0.8%. The WIX was down in trade since the market moved up almost 30 points in trade. So there was a little bit of strength that was seen. But ICICI managed to bounce back. Reliance managed to bounce back. M&M and Indiabulls Housing were the counters which managed to inch up higher. The HDFC Twins providing some bit of resistance to the market moving higher. But Agam, what are you seeing?
Right, Darshan, we've seen a little bit of consolidation, range-bound move for the benchmark indices yesterday. What we also saw was very little change with respect to open interest, as one might, imagine. Open interest, of course, for the Nifty moved up 2%. When it comes to the Nifty Bank, we did outperform the benchmark indices, and it did move up by as much as 0.7%, but very little change in open interest, as you can see here. However, in the India Volatility Index cooled off, and we did see it come down by as much as 1%. It's still above the mark of 15. It may be a matter of concern for those who are long in the markets. And very little change in the Nifty put-call ratio, currently at around 1.4. Coming down to some changes in the stock options, what you've really seen is more writing around the 9,800 put and a little more writing in the 10,300 calls. So as you can see, traders are now starting to build a little bit of a range for the Nifty, at least in the near term, say a span over the next 2 to 3 weeks. And this can serve as a broad range. In terms of stocks, we're watching out for a lot of these tire companies which moved up quite substantially in longs building in. So MRF is one of them. Currently at around 75,500 apiece. Its open interest surged by as much as 19%. Similarly, we saw a lot of traction in something like a Balkrishna Industries. And of course, on the losing end, we had some amount of weakness in Hindalco, where the underlying moved down by as much as 1.5%, but we did see about nearly 15% increase in open interest towards fresh shorts. So these are some of the stocks that we'll be watching out for, but that's as far as our markets go. Let's now head across to Bloomberg Asia's Paul Allen, who's standing by with the key headlines of the morning so far. Paul, over to you.
Police in California say a woman shot and wounded 3 people at Google's YouTube headquarters in San Bruno before killing herself. No motive has been given for the shooting, which has left one man with critical injuries. Google says the situation appears to be contained, and sources have told the Associated Press it's being investigated as a domestic dispute. The Bank of Japan has confirmed it is talking about an eventual retreat from massive stimulus, but says it's too early to offer details. Governor Haruhiko Kuroda told the Diet he's holding internal discussions and policy normalization will depend on conditions at the time. He repeatedly said inflation is far from the 2% target, and he'll continue with stimulus until that goal is reached. And San Francisco Fed President John Williams is moving to New York. He's putting a monetary economist and Chairman Jerome Powell's inner circle and a banking industry outsider to help oversee Wall Street. Williams has spent most of his career at the Fed and is considered a centrist on monetary policy. He recently favours 3 or 4 rate hikes this year. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
I'm not that concerned about trade war getting to the oil market. I think this commodity is unique, as you know, and yes, it may affect the cost of drilling, the cost of completion. But I think overall that effect is going to be minor to the oil prices. So this commodity being resilient over the years, I think it's more affected by the supply and demand rather than trade wars.
Well, let's talk about what you're trying to achieve on the supply side. So I understand there's been discussions about perhaps looking at the benchmarks. So you help me. I understand that in Vienna there was a bit of a view in terms of looking at the 5-year average, which I know you've guided the market is what you're using, and a 7-year average. Which one is it that the market needs to focus on?
I think first of all we need to achieve what the basis of what we agreed on, and that is talking about the 5 years average. We've been talking about it, and the deal was based on the 5 years average. But is that fair or not fair? That's another question to analyze. I would prefer to focus on achieving the mission first. And then we can talk about, do we use a 5 years average or something else after that. Confusing that with the situation that we are in today and juggling with whether it's this or that does not help.
Okay, well, let's tie it down, because I saw you 6 weeks ago in London, and what I need to understand is Q2, Q3, we might rebalance the market. Tighten that up for the market, because you've come from, what, 293 excess to 44. Do you think it's going to be at the end of the second quarter? Do you think we're going to hit balance at the end of second quarter?
Well, prediction is very difficult because, as you know, shale oil is also advancing more than some of the analysts expected. So we need to watch and see. There is a meeting happening in April at the GMMC, and I'll be there. The chairman, the chairman and co-chair will be there. We will discuss how is the market situation. How is the conformity levels and the compliance by OPEC and non-OPEC? So I think it's premature now to give a view until we meet in April and report back the results.
Back to local equity markets. Hi, I'm Nikki, and stock of the day is Infibeam Incorporation. Well, for the second consecutive day, you have smaller cap fund buying in 2% equity for the company for a sum of around 163 odd crore. This is for the second straight day that the small cap fund has actually purchased equity in this company. A day prior, smaller cap fund, World Fund, had invested around 288 crore to purchase in 3.5% equity in the company. In the past 2 days, smaller cap World Fund has bought in 5.5% equity for a sum of around 451 odd crore. If you look at the shareholding pattern, you would see promoter holdings stands pretty much stable at 44.52% as compared to the public shareholding, which is at 55% currently. Separately, we also saw Network 18 that investing 48 crore in the e-commerce company. It has Infibeam has allocated 21,45,000 fully convertible shares to the Network 18 group to explore strategic options between the two companies. Warrants are allocated at a conversion price of 186 per equity share, and the agreements have been entered for advertising Network 18's products and services. The pact is valid for 24 months. Just to give you a rundown of the two companies, the deal marks the recommencement of investment by Capital 18. Now, this is a company which is going to be structuring the deal. Capital 18 has earlier made an investments in firms like Yatra, Online Ticket, and Book My Show.
Let's shift focus to currency and commodity space, starting off with Indian rupee first. After a long holiday weekend, the Indian rupee yesterday resumed on a strong foothold and ended 17 paise higher at 65.01 levels against the dollar. Now, rally in local equities amid strong core activity data largely supported rupee's up move. Traders now shift focus to RBI policy meet, which starts today. According to a Bloomberg poll, the central bank is expected to keep interest rates unchanged amid a gradual recovery in growth as well as easing inflation. Well, speaking of the debt market, sovereign bonds gained yesterday as yield on the 10-year benchmark security declined nearly 7 basis points to end at 7.33%. Well, after RBI allowed banks to spread their losses, that is their bond losses, over the next 4 quarters of financial year 2019. In terms of flows into debt market, global funds reduced their rupee debt holdings yesterday. They reduced their portfolio by nearly 1,000 crores according to NSDL data. Well, on the global front, the dollar index rose against other major currencies after the recent political tensions eased between US and China. Elsewhere, euro declined against the greenback after Eurozone manufacturing PMI declined for the 3rd straight month. And lastly, coming back home, the dollar rupee is trading at 65 per dollar in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. With that, let's shift focus to commodities market. Good morning, Jayesh. What cues are you picking up from this market today?
Morning, Saloni. Let me start off with the oil space. Now, oil prices are, declining in early Asian hours, but did manage to hold on to some of the gains overnight. So WTI surged as much as 0.8%. Now, this is on the back of industry report, which is set to report a surprise decline in the inventory. However, there is a Bloomberg survey which contradicts this report. Now, as per a Bloomberg survey, the US inventory is likely to decline, rise as much as 2 million barrels for last week, while API is likely to report an inventory decline of about 3.3 million barrels for last week. So those are the two contradicting numbers that we have. So really we have to wait and watch what really comes out. Now, as far as the base metal space is concerned, the index itself closed about 4 days higher. Now, copper climbed on the back of continued growth coming in from the Chinese manufacturing sector. As also nickel was up for the 5th straight day, and it posted its longest winning streak since the month of Jan. As far as other base metals are concerned, we had zinc and tin, which rose while aluminium and lead fell. Now, if you look at the Shanghai Futures Exchange, we can see that most of these base metals have started on a weak note, especially Shanghai Zinc, which is trading about 1% lower. Now, moving on to the precious metal space, gold futures were under pressure on the back of equities, rising for overnight, and the dollar actually advancing. So gold closed lower for the 2nd day in a row on the back of dollar index, which gained for the 2nd day in a row.
Amongst the stocks that we're tracking in trade today includes Zensar Technologies, which is one of 4 here, a multi-million-dollar contract from the city of San Diego. That's a $79 million contract, which translates into about $20 million of revenues annually, and that's about close to 4% of the estimated FY18 revenues. This is the first contract that the company has, or the deal that the company has won after the new IMS head was appointed. Remember, IMS is a segment that wasn't really doing well or dragging the overall performance of the Zensar Technology. So you could see some positive reaction on the back of that development. You also have a PTI report which says that Jet Airways will buy 75 Boeing 737 planes to increase its presence or expand in that fast-growing domestic aviation market. We are also looking out for AkzoNobel, where they have said that they will consider a share buyback on April 6th. Some clarification also coming in from Jubilant Foodworks, which has said that they have passed on the full benefit of the GST rate cut to consumers, and that they will submit the documents to the anti-profiteering body. Big Block Construction, that's another relatively smaller company, but they will issue 8 lakh convertible warrants to promoters. And lastly, we're also watching out for Indiabulls Housing Finance on the back of a bulk deal where Treetop Convertible Sicao has bought 1.8% stake, and the seller was Merrill Lynch Market Singapore. So these are some of the stocks that you need to watch and trade today.
Mishra Dhatu Nigam, also known as Madani, will be listing on the exchanges today. Now, the company had raised close to 438 crore rupees by issuing its shares at 90 rupees per share. Now, the issue was subscribed nearly 1.2 times, with most of the demand coming in from the QIB portion. Now, the QIB portion was subscribed nearly 2 times, while the HNI and the retail portion saw a subdued demand of close to 0.12 times and 0.7 times. Now, in this QIB portion, it was the 5 public sector companies that bought stake. Now, these 5 public sector companies bought nearly 15% stake in Mishra Dhatu Nigam. SBI, Union Bank and 3 other insurance companies, that is LIC, GIC and New India Insurance Assurance, bought stake in Madani. Now, LIC bought close to 8.7% stake. Now, all these 5 public sector companies subscribed for nearly 58% of the total offer size of Mishra Dhatu Nigam. Now, the street is expecting this stock to list at the street is expecting a flat listing from this IPO. So let's see how the valuations would stack up if it listed at a discount and if it lists at a premium. Now, at the issue price, the market capitalization was close to 1600 crore rupees. Price to earnings was 30.9. Market cap to sales was 4.1 times and EV to EBITDA was 16.5. And at a discount, the market capitalization would be close to 1500 crore rupees. Price to earnings would be 27.4 times. Market cap to sales would be 3.6 and EV to EBITDA would be 14.4. And if it lists at a premium, then the market capitalization would cross 1800 crore rupees. Price to earnings would be 34.3. Market cap to sales would be 4.5 and EV to EBITDA would be 18.6. Now, if you see, Madani is a government-owned company which manufactures special steels and super alloys, and it is also the only manufacturer of titanium alloy in India. Now, the company caters to a very niche market, and the growth of these 3 products of the company is expected to be in the range of 4 to 9% over FY16 to FY21. Now, if you see the financials of the company, the company has 2 plants, one in Rohtak, and in the company's currently it has only 1 manufacturing plant in Hyderabad and is in process of setting up 2 more plants in Rohtak and Nalaur. Now, the company's total order book is close to 517 crore rupees. And if you see the financials of the company's revenue, net profit and EBITDA is expected to grow at a compounded annual growth rate of 20%, 16% and 24% over FY13 to FY17. On the balance sheet side, the company has a very low debt on books and it's a net cash company. So the cash value per share is close to 14 rupees and the book value per share is close to 39 rupees. On the return ratio side, the return ratios of the company were a bit subdued for financial year 2018. The return on equity was close to 7.4 times, return on capital employed was 7.8 and return on asset was close to 4.4%.
I'm going to take you through the top 7 recommendations of the committee. The first relates to the situation of the home buyers, and it emanates from cases like Amrapali and JP Infra. What the committee has now proposed is that the home buyers should be given the status of financial creditors because the amounts that they give under the contracts with builders is for the purpose of raising finance, and so the definition of financial debt should be amended to include home buyers as financial creditors. The second important recommendation relates to the ineligibility criteria. Now, what happens is that the way the section on ineligibility is worded, it's not clear whether the connected person used in that definition applies only to the resolution applicant or even persons acting jointly or in concert with such a person. So now the committee has recommended that the ineligibility criteria will be applicable only to the resolution applicant and its connected person, because if the latter interpretation was taking that to be extending it to person acting jointly or in concert, institutions like banks or ARCs and alternate investment funds that are currently specifically excluded from the definition of connected person could have gotten caught in the term which is persons acting jointly or in concert with such a person, and hence a suggestion to do away with this term and expand the pool of potential resolution applicants. The third recommendation relates to what constitutes it as related party, and the committee has recommended that financial institutions which are regulated by financial regulators should not qualify as a related party if they have become so on conversion or substitution of debt into equity shares, and this substitution or conversion should happen ideally before the insolvency process is started against the corporate debtor. The fourth important change relates to who the moratorium applies to. Now, the moratorium is the period during which all other legal proceedings against a corporate debtor stand abated while that company is facing insolvency. So what the lenders currently were facing was they couldn't even invoke the personal guarantees of promoters that they had given, as collateral for loans to the, let's say, the subsidiaries or that are facing insolvency proceedings. So now what the committee has recommended that this moratorium should now only extend to the assets of the corporate debtor. This would mean that potentially lenders, if this recommendation is accepted and made part of the law, can go after promoter, guarantees or holding company guarantees that could have been given to them. The final change, rather the second last change, relates to trading in the companies that are facing insolvency proceedings. The committee has recommended that trading of companies that are facing insolvency should not be halted because it may result in better price discovery and continuation of the entity as a going concern. The final recommendation relates to the voting share. Currently, 75% of the Committee of Creditors need to approve for a decision to go through. That percentage, the committee has recommended, should be brought down to 66% or more for expediting the decision-making process at the Committee of Creditors level.
So after listing its life and general insurance business, ICICI Bank is all set to list its broking business, that is ICICI Securities, today. Now, as far as the issue price is concerned, it is set around 520 per share. Now, ICICI Bank, which owns nearly 100% in the securities business, initially planned to dilute nearly 24% stake, thereby raising funds in the tune of 4,000 crore. However, after the 3-day offer, ICICI Securities reduced their offer size by 500 crore to 3,500 crore after shares set aside for HNI and retail investors were not fully subscribed. Now, in terms of subscription, the IPO was subscribed. The IPO could manage a subscription of 78% on the overall basis. Now, given the breakup here, QIB portion was fully subscribed. However, HNI and retail category quota was undersubscribed by 36% and 88% respectively. Now, in terms of valuations, if ICICI Security manages to list exactly at the issue price of 520 rupees, it will command a market cap of around 16,750 crore. However, given the listing scenarios here, dealers are expecting this IPO to list at a discount, and if it were to list at a 10% discount, say at 470 rupees, it will command a market cap of around 15,000 crore. And if it were to list at a 5% premium, say 545 rupees, it will command a market cap of around 17,550 crores. Now, given the market cap scenario, the price to earnings ratio will vary in the range of 45 to 52 times, which is still expensive as compared to its peers. Now, in terms of business, ICICI Securities is the largest equity broker in terms of broking revenue and active clients traded on the NSE, and it is not only the largest, but as you can see here, ICICI Securities have maintained their leadership position since FY14 till FY17. Now, in terms of return ratios, ICICI Securities has managed to yield highest return on equity to its investors of nearly 90% as of March 2017, as compared to its peers, Edelweiss, IFL, which have yielded nearly 15 to 20%. Now, in terms of valuations, ICICI Security is the most expensive as you compare it to its peers. It trades around 49.6 times its earnings, while it trades around 34.2 times its book value, which is way higher as you compare it to its peers, which is in the range of 3 to 8 times. And lastly, major brokerages, as earlier highlighted, they recommend their investors neutral to avoid this issue, as they believe that ICICI Securities is asking for too much given their expensive valuations.
Well, on to some more stocks to watch based on the delivery buying and selling as of yesterday. The first stock that you should keep on your radar, that would be Tata Chemicals. Now, yesterday it gained as much as 3.7% and saw delivery buying of more than 77 crores. The delivery volume actually shot up 155% at nearly 11 lakh shares as compared to its 5-day average, and the total volume shot up 160% at nearly 27 lakh shares as compared to its 5-day average. Second stock to watch out for would be from the tire space. Now, all of the tire stocks stocks were in focus yesterday, but CIAT that gained about 4% in trade and saw delivery buying of nearly 58 crores. The delivery volume more than doubled at about 3.6 lakh crore shares as compared to its 5-day average, and the total volume shot up nearly 90% at 15 lakh shares as compared to its 5-day average. Last and final stock, Madani Sumi. Now, after the Rydal acquisition announcement, it gained about 3% in trade and saw delivery buying of more than 140 crores. The delivery volume was up 55% at 42 lakh shares as compared to its 5-day average, and the total volume more than doubled at more than 1 crore shares as compared to its 5-day average.
I will appeal to the GST Council through a consensus. Finally, this product has to come into the GST framework. Consumers should get rational price in all over country.